Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news reality and expectations seem to be diverging. But first up today, we can report that the weekly dairy pulse auction for skim milk powder and whole milk powder brought little change in the whole milk powder price from the previous full global dairy trade auction in US dollars, while the skim milk powder price rose 3% on that same basis, but basically a recovery. However, things are reversed in New Zealand dollars due to the weaker greenback, with the whole milk powder price falling 1.4% and the skim milk powder price only up 1.7% in our currency. Internationally, the IMF is warning that rising US tariffs are marking the start of a new global era of slower growth. Since January, sweeping import duties and retaliation are raising trade barriers to levels not seen since the Great Depression, they said. The IMF cut its global growth forecast for 2025 to 2.8% from 3.3% and sees continued weakness through 2026. The US will be among the hardest hit, with 2025 growth cut to 1.8% from 2.7%. Others like Mexico, Canada, China and the EU will feel some effects, but are likely to be minor compared to the US. Meanwhile, US Treasury Secretary Bessent has told a private meeting the tariff war is unsustainable and will ease soon. News of these remarks has led to a financial market rally. The problem remains, however, that neither Trump nor China show any signs of backing down, and Bessent himself admitted that talks to de-escalate haven't even started. Markets might be getting ahead of themselves, as is Bessent. In the US, the Red Book Retail Impulse Monitor was up 7.4% last week from the same week a year ago, the highest since the end of 2022. But this is becoming more of a measure of inflation than real sales activity as the tariff taxes get passed through. The Richmond Fed's factory survey for the Mid-Atlantic states reported weak results. It plummeted to minus 13 in April from minus 4 in the previous month and well below market expectations. It is the sharpest decline in factory activity there since November. Meanwhile, their service sector gauge fell too. The latest and large US Treasury bond auction saw less support, but more than sufficient. However, the median yield fell back to 3.74% compared to 3.94% at the prior equivalent event a month ago. Canadian producer prices rose 4.7% in the year to March, but they are rising at a quicker pace in recent months. Canada is in its final week of election campaigning. Across the Pacific, Taiwanese export orders rose to the elevated level of $53 billion in March, but they've been doing this for so long now that the year-on-year gain isn't special for them, only up 12.5%. In the EU, consumer sentiment fell more than expected in April to its lowest level since November 2023. The US Treasury 10-year yield is now at 4.39% and a 1 basis points dip from this time yesterday. And the price of gold will start today at $3,398 an ounce and down $19 from yesterday. And oil prices have risen $1 or more from yesterday to be now just under $64 a barrel in the US, while the international Brent price is now just on $67.50 a barrel. And the Kiwi dollar is now at 59.8 US cents and down 20 basis points from yesterday at this time. Against the Aussie, we're up 10 basis points at 93.7 Australian cents. Against the euro, we're up 20 basis points at just on 52.3 euro cents. That all means our trade-weighted index starts today at just on 68 and little change from yesterday. And the Bitcoin price starts today at $91,488 and up 5.4% from yesterday. Volatility of the past 24 hours has again been moderate at plus or minus 2.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.